There's like first time we had any sort of real liquidity, suddenly everybody wants a little piece of it. And I just couldn't stomach the idea of paying 1% to a financial advisor.
Real estate, in many cases, is local, and in many cases, it's very emotional. People make real estate decisions a lot of times not based on hard data, but based on emotions.
I think one of the biggest benefits of PortfolioPilot is that we try to eliminate the human bias involved. Investing is filled with emotion, no matter what level you're at, whether it's real estate developments or private investments or public market investments. The idea of shopping around for a better deal, I think, is for large purchases, for like big investments, for real estate in particular, is like surprisingly foreign to people. I think having optionality, I think a lot of people feel like the choice is either like buy this thing or the deal disappears forever. And I think the more experienced you get, the more you've like been in the game, you realize that there's always just another deal around the corner. I think that people panic sell, people buy into euphoria and everything else is going up. It must continue to go up for a long, long time. And like, there's something about just constant learning, rapid iteration. Like, a lot of it just comes down to shots on goal, I think, too.
Welcome to another episode of Real Estate Development Land to Legacy. I am here with Alex Harmson today, who is going to talk to us about investing, AI, and all the fun things that has to do with technology, investing, and trying to manage it using new tools. He's got an excellent background. Alex, I'll let you introduce yourself.
Happy to get into it. Thanks for having me on, Eugene. I feel like I've been fairly entrepreneurial over the years. Started a space society in Canada at some point, worked with Engineers Without Borders, worked at NASA for very early rovers and the Mars helicopter, a little drone that landed on the Martian surface, worked on engineering, physics, and economics in school, and then started my first business, Iris Automation, 10, 15 years ago, raised about $25 million, scaled that up globally, regulatory approvals around the world, focused on autonomous vehicles, which feels crazy compared to what I'm doing right now in the investing world. Worked with biotech at this company, Verisome Life, building digital twin of the human body for drug development. And then over the last 3.5 years, I've been working on a company called PortfolioPilot. And we've basically built an AI financial advisor for individuals. And so human financial advisors are going the way of the dodo bird, and everyone needs to adapt to this new AI world. And so what we've built is the ability for individuals to be able to track your entire net worth, everything from pensions, annuities, real estate investments, real estate properties, public market securities, 401ks, cash accounts, stock options, whatever might comprise your total net worth. And then on top of that, we'll help with estate planning, financial advice, thinking about investment suggestions, tax optimizations. I don't know if we're quite ready for AI to manage our money for us, but the idea that AI can come in to your entire financial life, all your investment properties, find optimization opportunities, feels like there's already tens of millions of people that are bought into that idea. And then crucially, we are actually a registered investment advisor with the SEC. And so we can actually give financial advice completely automatically through the platform itself. We don't have a disclosure behind everything and limit and neuter the answers that we give to people in saying this is not financial advice. So we've built a macro engine. We do a fair amount of forecasting there. But what ties it all together? Probably some sort of modeling, simulations, my desire to just work on interesting, crazy stuff and try to make some sort of disruptive impact in the world to move humanity to a better place.
Wow, that sounds incredible. When you were talking about Mars exploration and all the fancy space computer stuff, I'm thinking, how is this relevant to real estate developers? And then you brought it full circle to financial industry. This is incredible. So obviously, a lot of listeners on this show are early in their development journey and they're trying to make better investment decisions. How can AI tools, potentially like PortfolioPilot, could help them make smarter and more data-driven choices?
I think one thing that most people that we talk to right now, we have about $30 billion of assets on the platform. And it seems to me like I encounter lots of smart people every single day. And all of them believe that, if I only had a month, I could read through all the rules and all the suggestions and, take some books and courses and figure everything out myself. The main benefit of whether it's PortfolioPilot or ChatGPT or any other AI tool out there is the idea that, we can proactively generate suggestions, advice, answer questions in a way that basically brings the experts to you individually. Like already now in 2025, the difference between someone using these AI tools and someone just doing it all themselves, the old school, pre-2020 way, probably a 10x difference in how much you can think through the edge cases, how much you can optimize your finances, your projects, everything that goes into building and permitting, and even thinking about portfolio management, right? Part of the reason you might even think about real estate is part of the overall portfolio. How do you think about running a bunch of different scenarios, thinking about long-term retirement planning, thinking about expected returns? What does the macro economy look like? How do real estate prices change over time? There's simply just too much to look at for one individual, and the chance you're forgetting something is pretty high. The reason why I built PortfolioPilot in the first place, I sold my previous company in 2021, bought a house in the Bay Area, started a family. We have 2 toddlers now, super cute. And, I started doing a little bit of investing, angel investing. I started doing some private market investing. I talked to lots of financial advisors and wealth managers and private bankers. I don't know, must have been put on some list at some point. There's like first time we had any sort of real liquidity, suddenly everybody wants a little piece of it. And I just couldn't stomach the idea of paying 1% to a financial advisor. I feel like there are lots of so-called experts out there, but what I really wanted was I wanted an advisor that wasn't trying to manage my portfolio. There's so much conflicts of interest in that. What I really wanted an advisor in the true sense of the word, right? Meet with me, understand my specific situation, the kinds of things that I want to do, and then, nudge me in the right direction. I'm perfectly fine if every single month I get 5% better. 5% better every single month over the course of the next 10 years is going to mean that I'm far better than, what I would have been otherwise. So I think it's sort of these like small optimizations and continuous growth. That's really the main benefit of AI, especially when it's personalized to you and your situation.
Wow, that's a lot to unpack there. So I'm thinking of this from 2 angles. Many people don't know I used to have Series 7 license in my previous life. That was more than 20 years ago. So I happen to know a little bit about that industry, financial advising, financial planners industry. The conflict of interest that you're describing is a real thing. What is hard for sponsors to engage big broker dealers to help them fundraise for their project is there's this endless loop of compliance. And so as a developer sponsor, if I'm trying to fundraise for a project, ideally I would work with a broker dealer. The reality is there's only very few small broker dealers that I could approach who would actually talk to me. And if I went to the giants like Merrill Lynch out there or any other big investment firm, they're not going to talk to me. They are only working with those large investors. So with your tool, can a mom and pop beginner developer come to you and put their project on your platform?
Absolutely. Yeah. In some ways, it's very similar simply to just me building out the company, right? How do I make PortfolioPilot credible to many people, to investors, to partners, to potential new employees that we're trying to hire? I also want to work with Fidelity, right? I also want to work with, Goldman Sachs and Robinhood. And I mean, it would be incredible if one of these big broker dealers said, we have this brokerage and you should also use PortfolioPilot to manage all your finances and get recommendations and advice. And so in some ways, what we are trying to do as a business is become a lot more legitimate. And so part of it is the tool itself, but also there's just a lot of stuff that we use AI for behind the scenes, right? I have people on our marketing team, I have people on our engineering team, product design. Part of it is simply just, making our website seem way more grand than it actually is, way more professional. We have a securities lawyer and a compliance team that we work with, right? We're being a registered investment advisor means we have all kinds of compliance obligations. And, one of the things that I was really worried about at the beginning was that we would need to basically add to every single page, footer and disclosures and interactive tool disclosure. And, this is financial advice. This isn't financial advice. Here's all these limitations with AI. And the first, I think, year of doing all that, I really resisted that and thought, let's do the bare minimum, whatever is necessary. And then we even ran A/B tests where we said, okay, what if we just double the length of the disclosures that we have? For example, let's see if it's worth cutting them down even further. And we found that every single time we added more disclosures, we added more pop-ups, annoying banners, mentions about bank level security, how where the models came from, where the data sources, timestamps. Every single time it increased conversions, it increased trust. People felt like they were dealing with a more grown-up, mature company. And honestly, for a while, it really baffled me, right? Like, it feels like objectively a worse user experience. But if you're giving advice, if you're dealing with people's money, whether you're taking the money from someone else, or whether you're, giving advice on someone's money for dealing with personal finances, millions of dollars, it matters a lot. It's all the little details. It's all the little compliance pieces, where your audience is coming from. And but my guess is that you can use AI, copywriting, these sorts of rules to build standard operating procedures and think about compliance and security and think about contingency planning. And, if you turn it into a 250-page packet and put it on someone's desk, and there's weight to it, things like that actually matter a lot when we're talking about investors and we're talking about, appearing a lot more legitimate. If I look at any other company, if I'm looking at making an angel investment myself, I go online and I, read what other people have written about them. There's something about reviews and does this person have their own personal website? And, there's something about brand building, even for an individual, that matters a lot. If you can get people to vouch for you, it's rare that people will actually ask for references, but every single time people are going to do reference checks, no matter what, right? If we're talking about $1 million, you better believe there's tons of reference checks involved. And if you proactively come up with those references, if you get people to vouch for you, if you put that into your packet, if that goes on your website, LinkedIn, it's all these sorts of things that matter a significant amount, more than I ever expected, to be honest. And they're all compounding too, right? They generate more leads. They generate more interesting connections. They get you as a guest on more podcast shows. It ends up leading to more investment, more news, and you want deal flow. And deal flow comes in so many different forms. It could simply just be, a better tax guy or, someone to help with developing or staging or permitting or the right connection to a local government or whatever it is, right? There's something very useful about just being connected in general.
So help me understand. I get that AI can help cut through all of the noise and can help investors evaluate their, investment decisions, choices. But then AI is also helping create their investment packets. And so, as you said, the thicker the packet, the more impressive it looks and the more people, take it seriously. So now I get AI to produce a bunch of words out of thin air, and then I have another AI tool to decipher a bunch of words to, boil it down to a one-page memo. Is that what we're going to? AI is validating AI.
Yeah, some meme I saw recently where it's like, hey, I have an email I want to send to someone I work with saying like, hey, you did a terrible job on this project. I'll redo it. And then it turns it into this beautiful 3-page letter describing everything. And then on the other end, they ask like, hey, summarize this email. You did a terrible job. Do it over again. And so obviously the idea of filler just for filler's sake, not that useful. I think if you're talking to investors, if you're going through some sort of due diligence process, I think the people that want to give you money need to believe that you can do it properly. You've thought through all the different scenarios that are involved, that you can do everything from money management to branding to more fundraising for the next stage, right? Especially if they're buying in to you and the relationship or some sort of larger investment vehicle that you're managing. When I say turn something into a 250-page packet, could be 50 pages of contingency planning. And I think it's useful for you to know what is in that packet. If you get questioned about it, it's useful to be able to answer, understand roughly where things are in the packet. It needs to feel like you've understood this and that it's part of your decision-making process. Just the exercise of going through and creating the 250-page packet means that if there is a problem somewhere along the way, you probably would have caught it. If I'm talking to you, you have your 20-page due diligence packet and the other guy with 250 pages, and I flip to a page and there's like, it's not truly just nonsense words. There's actually content there. You basically have to do a much more exhaustive search and think about more of the edge cases and more of the potential restrictions to be able to fill 250 pages. Obviously, you can write denser and not be as long. And I go back to grade 11, grade 12, high school, and using longer words might help fill up the word count and the character count of the essay. But you can only do that for so long, right? The benefit of AI in this case is helping you think through the full picture. And I think investors in general want to see someone who's thought through everything, because no matter what, something is going to happen 2 years from now, 3 years from now. And it's just much more likely if you have foreseen that scenario.
Makes sense. Let me ask you a different question. So real estate in many cases is local, and in many cases it's very emotional. People make real estate decisions a lot of times not based on hard data, but based on emotions. AI, typically, the way I understand it, eliminates the emotional component and drills down to hard facts. With that, and correct me if my assumption is wrong, how can a beginner who's fundraising for a project cut through, and when a tool like yours or others using AI that cut it down to dry facts, it would seem to me that only very large, very established firms could compete on that level. And the small beginner investors, developers would never be able to break through. Is there a way for them to actually attract investors based on that emotion, based on the story? Maybe they had some negative events in their history that they've overcome. AI would potentially flag it as a negative and filter it out, whereas humans can see through that and develop some sort of a trust.
Yeah, I think excellent question, right? So there's a bunch of different things that come to mind. I think on one level, yes, you can think about AI as cutting through the noise and removing the emotion. And I think one of the biggest benefits of PortfolioPilot is that we try to eliminate the human bias involved. Investing is filled with emotion, no matter what level you're at, whether it's real estate developments or private investments or public market investments. And so trying to remove that emotion, looking at macro trends, thinking about aggregated performance and volatility and comparative performance, other local properties, things like this. So I think that's part of it. We use AI a lot for marketing at PortfolioPilot. And one of the things that we have a prompt that we keep refining that we call Alex's review. Basically, the entire marketing team uses this one post. They create marketing material and then they take Alex's review as basically a prompt, feed it into ChatGPT, say, here's the marketing thing I want to put out, whether it's a tweet or a website update or some like one pager that we're putting together, a pitch deck, goes through Alex's review. And the idea is that it comes up with 10 very specific suggestions on how to improve this specific piece of marketing material. Sometimes we take one off the list and add it. Sometimes it's 9 things. And it's meant to be sort of just like a filter for the team to think. One of the most important things that appears in that prompt in particular is find a way to make this story or this piece of marketing material more emotional and more personal, more relatable. And we've simply just found that if we're doing any sort of marketing, any sort of communication, if we're telling the story, the more we can tie it to my specific history or tie it to the user, what they might be feeling in the moment, if we add a little bit of connection about historical context and how that might bring out some emotion, we find that it helps tremendously. It's very easy for someone on our marketing team. It's very easy for them in the moment to say like, okay, we got a webinar coming up. Let's advertise the webinar. It's going to happen on July 28th at this time. Here's the Zoom link. This is the title of the webinar. Here's the subtitle. And here are some of the bullets that we're going to cover. It feels so easy to just go for that and put the facts on the table. And then having AI tell you, like, there's literally zero emotion here. What might the user be feeling when they receive this email? 8 different ways you might think about adding some sort of emotional or personal connection. Not just a webinar. One of our favorite partners with the company is giving this talk. It's only 30 minutes long. It's super important, but you can get back to the rest of your day. If you register and you miss it, no problem at all. We'll send it to you afterward. This might not seem very important to you right now on a Tuesday, but if you think about making this one change, and if you do this 401k rollover, or if you listen to this pitch about investing, this is the kind of impact it could have over the next 10 years. Maybe it makes your retirement a little bit easier once you eventually get there. There's so many little ways that you can add emotion in. And I think the AI is more amplifying than it is formalizing. If you want to make it really formal, if you want it to help you strip away the human bias or the humanity, you can do that.
When we're talking about eliminating emotional bias in financial decision, what kinds of biases do beginner investors typically fall into? And how do you think AI can help protect them from themselves?
So many things, right? I probably talk to 2 to 4 users every single day, right? Across America, from all kinds of different backgrounds, age 20 to 70 years old. There's just patterns that repeat over and over again. I think one thing is that a lot of people just don't look at the big picture. They're really focused on, should I make this one trade? Should I sell this property? Should I move this thing? Should I fix this thing? Should I make a $10,000? Should I do this $10,000 expense? Should I move it to next year? Without really going high level and looking, does this really matter? Does it have an impact? A lot of people leave a lot of money on the table. There's just very simple things that you can do to simply just rebalance your portfolio, to take advantage of tax optimization opportunities, to not leave idle cash sitting there. Even just moving money from a savings account to a money market fund. These days with interest rates being so high, feels like fairly low risk way to get a little bit more, keep it fairly liquid for whatever big decisions you're going to make. The idea of shopping around for a better deal, I think, is for large purchases, for like big investments, for, real estate in particular, is like surprisingly foreign to people. I think having optionality, I think a lot of people feel like the choice is either like buy this thing or the deal disappears forever. And I think the more experienced you get, the more you've like been in the game, you realize that there's always just another deal around the corner. And so, you know, this is like some like standard, optimal stopping problem. There's something about just understanding the landscape, understanding the field for a certain period of time before you even make some sort of decision. And then at some point you say, okay, and now I understand and I have a bar. And the next thing that I find that crosses that bar, I'll invest in that. I think that people panic sell, people buy into euphoria and everything else is going up. It must continue to go up for a long, long time. I think that people don't properly think about the opportunity costs of something. And so, oftentimes it's time trade-off. The idea of, investing weeks or months, and investigating one specific stock or property, might better be spent on buying a couple different properties, a couple different stocks, doing a couple different angel investments, whatever it is. I think a lot of that gets eliminated when you have a plan and a very specific North Star. And so I find for a lot of people, in our tool, we have this idea of a portfolio score. And so a lot of people like the product simply just because we have a score that they can methodically improve over time. But I also think that for a lot of people that have some sort of, they feel good about the investment and they consistently make money, they have a plan and they have a set of rules for themselves. And the rules change over time, but they're like, it feels like a codified set of rules. I imagine that applies in this world.
Have you ever made a bad decision in your own investing journey and then later realized that it was just pure bias?
Of course, constantly, even today, constantly. But I think a lot of the individual's decisions don't matter very much, right? I think it's very similar to product development. I think there's basically just two different like schools of thought in product development. One of them is, really plan everything ahead of time, design things, spend a year building, do a massive product launch, and then see the reception. And then the other way is, just ship a really shitty version in week one. And then in week two, ship a slightly less shitty version. And in week three, make it a little bit better, get lots of user feedback, do, 52 mini launches instead of one big launch. And like, there's something about just constant learning, rapid iteration. Like, a lot of it just comes down to shots on goal, I think, too. And I think if every single time you were iterating on that set of rules, investing rules for yourself, then you realize that over time, a lot of the small individual investments don't really matter all that much. And, a lot of it just comes down to, this is my portfolio. Here's my long-term plan. Here's where I'm going, and I'm on track. And I think as long as you have this sort of like very quick iteration mentality in the actual investments that you make, but also just like personal growth, then, you'll be in a much better place 5 years from now, much better place than you otherwise would be. A lot of people just get hung up on like that one bad trade they made, that one bad investment. It feels, especially if you're fairly concentrated in real estate, like that, it's really problematic, right? You make the one bad investment and, it sets you back 3 or 4 years in your development journey. But even then, focus on what you learned from it, move on to the next thing. And it's easy me saying that, right? So much there's a common saying among startup founders is that there's only really one reason why companies die. People guess the reason, right? Co-founder problems or fundraising issues, or they didn't get product market fit, or they didn't know how to do marketing properly. But at the end of the day, there's only one reason the company actually dies. The founder gives up on it and they shut down the business. And that's like feels obvious, but I think there's a real lesson there. Just like if you don't give up and you just keep going and keep getting back up, then the company will never really die. And there's lots and lots of examples of people making it after being kicked in the face for 5 years. They can't figure it out. They keep going, they keep going and keep going. And most people just need one lucky break, really make it. And, 100 lessons learned is probably the story of most successful people.
Well, right. Yeah. We hear the stories all the time that, you have to fail 100 times until you finally succeed. And you never know when that one final time is. It may be 2 fails and 1 success. It may be 50 fails and 1 success. It may be 100 fails and 1 success. And it all depends on that consistency and that drive to keep going. Practically speaking, how can a sponsor developer who's fundraising for a project use PortfolioPilot to put their opportunity on the platform to help them fundraise?
Yeah. The biggest thing, people sign up at portfoliopilot.com. They answer a bunch of onboarding questions, and then you can simply connect accounts, manually enter properties, and basically put together that portfolio. We'll connect it automatically to macro trends and news that's happening. And there's forecasts involved. There's scenario models that you can run. You can add different events and ongoing expenses, upgrades and renovations. You can model this out over the course of 10, 20, 30 years, add different mortgages, look at leverage, look at cash flows. And, people use this, for a wide variety of different use cases, right? In the simplest version, it's someone with their own house that they live in and 401k, and a cash account, for their emergency savings, and they want to plan for retirement. But we have people with, hundreds of millions of dollars and 10 properties on there as well. And, the properties are simply part of the larger portfolio, and they're trying to manage. You can build draft portfolios. You can think about what happens if they sell at this price. It'll help you calculate taxes that you pay as well. And it'll help you calculate exposures. The idea of adding international properties is like, once you cross $5 million, the chance of having some, international property in Mexico or whatever it is starts becoming higher and higher. And so the idea of, how do you think about downside protection across the entire portfolio? How do you think about diversification across a bunch of different real estate properties? All of that exists within the core.
Interesting. And what are the fees like? How do you make money?
Yeah. There's 3 tiers. One is, there's simply a free tier. So the scenario planning, the net worth tracking, the risk calculations, all part of the free tier. And then there's a gold tier in which we actually give financial advice. So this is where a lot of the tax optimization, the investing advice, the fee optimization comes in. And then there's a platinum tier. The gold tier is $29 a month. So we're not, this is not crazy at all. Really like meant to be a mass consumer product. And then the platinum tier is $99 a month. This gives people access to our AI equity search and AI assistants and basically a bunch of AI investing research features that become available in that platinum tier.
Alex, if somebody wants to ask any follow-up questions, is there a way to reach out to you or to your team?
Absolutely. Yeah. Either follow us on Twitter, PortfolioPilot, or, me personally, Alex Harm, and just send us a direct message or sign up for the products, contact us over supports, find me on LinkedIn. We're 30,000 users and, things are getting a little bit crazy, but like I said, I still have lots of individual user conversations. It's so important to us to get user feedback and figure out what's working, what's not working. I'm constantly trying to learn and stay as involved in user, experience as possible. And, every single Monday we ship a new release, learn the next week and keep trying to tie it back in. And as a small startup, we're 10 people at this point, we've raised a couple $1 million. Our only real advantage is speed and personalization and, being able to have those direct conversations in a way that, for Robinhood and Fidelity is, very difficult to. And so, you focus on the things that you can differentiate on. And this is the way we win deals or clients. And so far seems to be working really well for us. Let's see in a year or two.
Excellent. This is amazing, Alex. I'm super excited for you and to the platform and what you're doing. Thank you very much.
Thanks for having me on.
Awesome. Thank you. And if this conversation gave you new clarity or tools to move forward in your development journey, the best way to say thanks is to subscribe and leave a great review that helps more people like you find the show and join the conversation. Thanks for being part of Real Estate Development Land to Legacy.
Real estate development. Real estate.